Good morning, Habibis, and welcome back. In this video, I'm going to talk about three assets: gold, USD Japanese yen, and Aussie dollar US dollar. I'm going to start with the most exciting for an economist, USD Japanese yen. The hawkish commentary from the Bank of Japan and the rising inflation in Japan, lifting bond yields to multi-year highs and pushing for rate hike expectations. Whereas if you look at the American counterpart, the Federal Reserve, you can see that the Fed is currently waiting and making decisions based on data and meeting to meeting. And the communication from JPY was very clear. They're not in a rush to cut interest rate, but if you look at the data, we can see that it's very mixed, and sometimes we have inflationary, the next week we have deflationary data. So if you're comparing the two countries, one of them is lifting interest rate or raising interest rate, whereas the other one is not doing anything, but most likely it's going to start cutting interest rate on the second half of 2025. And this is called the interest rate differential. If one country's interest rates are rising and the other one is expected to stay the same or decrease, that gives us an opportunity or comparative advantage in terms of the interest rate differential. And those who understand the dynamics between interest rates can profit from this. Let's start the analysis with USD Japanese yen. On the chart you can see the 4-hour time frame, very nice bearish market structure and a descending bearish channel. Yesterday the Bank of Japan came out with some very hawkish commentary that they're going to increase interest rate in the first half of 2025 instead of the second, as they communicated last year. If you look at the global yields, you can see that the bottom pink line is the Japanese interest rate. And after decades of negative interest rate, Japan has finally started lifting its interest rate to fight inflation within the country. On the top, the purple line is the US 10-year Treasury yield, and you can see the black one is the US 2-year Treasury yield. You can see that US interest rates have been quite elevated in the past 3 to 4 years, and this was the effect of the COVID-related supply shock inflation generated in the US economy, well, globally actually. So while the US interest rates have been quite elevated in the past few years, Japan didn't raise interest rate until 2024 March. And if you look at the communication between the two countries, you can see that Japan is expected to increase interest rate, and the Fed currently is doing nothing but more likely going to cut interest rate in the second half of this year. If I had to explain in short, if you look at one country which is raising interest rate, you can expect that their currency is going to appreciate against the other country which is not raising interest rate and maybe going to cut interest rate. So that asset or that currency is going to depreciate. So the country which is lifting interest rate, the currency is going to appreciate and the other one is going to depreciate. In this case, USD dollar is going to depreciate against the Japanese yen because Japan is expected to increase interest rate and the US is expected to decrease interest rate or leave the same for a few months. So now that we understand how to make money from the interest rate differential, let's look at the technicals. So as I explained, the USD Japanese yen is printing a very nice bearish market structure with lower highs and lower lows, and you can see that price is currently dancing in the middle of this channel. Now I see two entry opportunities for a short sell. The first one is somewhere around this area and the second one is at 152.75, and most likely this have higher chances for success. If you put the Fibonacci up, you can see that the weekly pivot lines up with the minus 38.2 Fibonacci rejection level. You can also see that this would be a beautiful head and shoulder pattern signaling a massive sell-off on USD Japanese yen. So combining the fundamentals with the technicals, everything is pointing into the direction that USD Japanese yen is going to drop further. So just to give you the levels, look for short opportunities between 151 to 152.75. You can start shorting from the current position and just have a wide stop loss. If you look at my MetaTrader, I have a short position on USD Japanese yen, but because I'm using a relatively tiny position size, I can move the stop loss a little bit higher, but not too high. Maximum loss I can endure is about maximum 1%. I wouldn't go that far, but anyway, I can move the stop loss. So this is my live MetaTrader, and you can see that speculating on a short sell. I already entered into a sell position. You can see all the details on the screen. And if price comes a little bit higher, then I will be looking for more sell opportunities at 152.75 or a little bit lower. If you're struggling with small account, here's a perfect opportunity for you. Forex is giving away free money. If you go to the Forex website, which is one of the best brokers I'm using for over 4 years now, they're giving away 50% deposit bonus. So if you deposit, let's say $100, you get 50% of that as extra margin on your account. And believe me, it helps so many traders and can give you an edge during the volatile days. It's free money, it's your money. Make sure you claim your bonus. You can find all the links below the video in the description. And moving on to the second asset, which is gold. Let's see what open position I have on gold. You can see that I entered into a long position that yielded about 156 pips since the 17th of Monday. So yesterday, I sent out a signal to the VIP members, and most of them or many of them profited from this trade. And you can see that I took about 80% of the profit at 156 pips. So you can see that the general bias on gold is still bullish. If we start with the fundamentals again, you can see that gold is heavily influenced between geopolitical tensions, between US and Russia peace talks, and also the uncertainty around the Trump tariffs. So many question marks in the world right now, but if you look at the technicals, you can see that even the technicals are pointing into higher gold prices, and many of the analysts are expecting $3,000 this year, first half of 2025. So yesterday I entered on the daily and the weekly pivot, which gave us 156 pips, but let's see if we have any open opportunities today. So what I'm expecting today is maybe gold is going to pull back to the daily and the weekly pivot. This would be the ideal scenario because the daily and the weekly pivot is always a good foundation or a support when the market is in a bullish trend. So the general bias is cautiously bullish. If price pulls back to this area around 2,900, I'm going to enter into another buy on gold. Is it going to be 2,902 or 2,900 or maybe a little bit below? Who knows? But make sure to keep your eye on this price level. If price comes down significantly below 2,900 to around 2,880, that's the invalidation level, because that it can wipe out all the stop losses for the bulls and price can pull back easily to 2850, which is another important support level. So the first entry is going to be above 2,900. General rule of thumb, if price continues to stay above 2,900 and the daily and the weekly pivot, then the market is going to continue higher. If it breaks this price level, I would just stay out from the market and look for other entry opportunities at around 2850. And the last analysis is going to be Aussie dollar, US dollar, which I haven't traded for a long time. If you look at the economic calendar, the Royal Bank of Australia have decreased interest rate. And if you look at the global yields, you can see that the Aussie interest rate is much lower than the US interest rate. And I explained at the beginning of the video how the interest rate differential can create opportunities and yield profit for us. So if you look at the US Treasury yields, which are significantly higher, about 100 basis points higher than the Aussie dollar or the Aussie government bond interest rate, it's clear that investors are going to favor the US dollar because the US is not in a rush to cut interest rate and going to keep interest rate for the first half of 2025. From this perspective, I'm expecting the Aussie dollar to weaken against the US dollar. And you can see that the market is already started shifting from a bullish momentum, breaking the market structure. Price is now trading the daily pivot, and I entered into a sell position. That you can see right here. It's currently running about -3 pips of loss, and based on my speculation, the price should continue lower on the interest rate differential. So if you're looking for entries, I think if it stays below the daily pivot, still perfect opportunity to enter. We have a very nice rejection candle, actually 2 rejection candle from this price level, which is another 2 confirmation that price should continue lower today or tomorrow. So if you're looking for entries, this is your own trading decision. This is not trading advice, but I have a sell position on Aussie dollar, US dollar, and if it stays below 0.636, then I'm going to add more sell positions as the time passes. So once again, make sure that you use the 50% deposit bonus by Forex because this is a wonderful opportunity and helps so many traders. And if you want to join the AlphaFX Academy, where I do morning briefings, where I prepare traders for the day ahead, and I'm giving out my analysis and I'm showing my entries, then go to alphafx.eu and take one of the memberships while it's available for this month. Thank you so much. Make sure you leave a comment and hit the like button. This is the AlphaFX.